At open homes, the massive interest rate hike everyone was panicking about next month might have just been completely cancelled. In the next 3 minutes, I'm breaking down this sudden global shift that's freezing the Reserve Bank. Why New Zealand's economy is hitting the brakes, an exact strategy first home buyers are using right now to buy bully sellers in a dead quiet winter market. Do not sign a property contract until you hear this. All right, let's talk about a massive U-turn economists are making for the July 8th official cash rate review. While financial markets were bracing for a painful rate increase, the script has completely flipped. Plummeting global oil prices are rapidly cooling inflation expectations worldwide. Because of this, experts are now believe the RBNZ will skip rate change altogether, keeping OCR steady at 2.25%. If you look at countries like Australia, US, they've been trapped in a higher for a longer interest rate cycle, battling sticky inflation, but that has crippled their housing affordability. Fortunately, New Zealand is catching a breather because our broader economic momentum is softening fast. The latest performance of a manufacturing index just plunged deep into the red, hitting its lowest reading in nearly a year. On top of that, ANZ truckometer data shows a clear drop off in road traffic, confirming that local businesses' activity is visibly slowing down. But despite the economic drag, we are seeing massive moves in a corporate world. TSB just reported an incredibly strong financial year with net profit before tax $3.3 million, a massive 10% jump right before the historic sale of a Heartland Group later this year. Meanwhile, the agricultural sector is celebrating a huge win. The wool market has seen record-breaking finish to the season, with the prices hitting historic highs driven in a massive global demand, particularly out of China. Historically, booms commodity prices like wool have acted a massive buffer for the Kiwi economy during downturns. However, regulators are tightening the screws. The Department of Internal Affairs is cracking down, issuing public anti-money laundering warnings to six law firms, an accounting provider, and a real estate agency for failing to complete their independent audits. So, how does all of this wrap back around the property market? Let's break down the cold, hard pros and cons of buying a new house right now. On pro side, the residential market has settled into dead, quiet winter mode, meaning buyer competition has completely evaporated. Total auction rule listing are actively declining. Only about 1/3 of properties are actually selling under the hammer. Historically, a low clearance rate like this gives buyers ultimate leverage to negotiate heavy discounts against stressed sellers. But on the con side, the broader economic risks are very real. Banks are keeping a tight grip on the credit, and entering a slow economic massive debt takes serious financial discipline. We also face rising living costs on the horizon. The Natural Hazards Commission has drastically boosted its annual reinsurance cover up to 20%, massive $12.3 billion, which could push insurance premiums even higher. At the same time, massive industry debates are sparking over the fairness of the Fire and Emergency New Zealand levy system, with groups fighting to dump into a favor of a broader community protection levy. Yet here's the twist. First home buyers are completely ignoring the negativity. In fact, they are aggressively dominating the market right now. Out of $16.8 billion in mortgage approvals in May alone, more than half of the money was designated specifically for a low equity loans. First home buyers realize that while the winter market is quiet and auctions are failing, they hold all the cards. If you have pre-approval sorted, you don't pay the asking price, you negotiate hard. It's a fascinating, complex economic landscape, a slowly economically but massive opportunities for buyers who know how to play the game. What's your strategy? Are you sitting on the sideline or are you hunting for a winter property deal? Drop your thoughts in the comments below and hit that follow button for your next Kiwi Economic Blueprint.